You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's blog gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/blogs today to sign up for regular updates via email. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That rockin' tune means it's time once again for a rockin' show we like to call Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, a little fun thing we like to call the Options Insider Radio Network. You may have heard of it. If you're listening to this, you're probably subscribed to it. If you're not, if you just subscribe to Vol Views, that's fine. We welcome that as well, but if you want to get the full kit and caboodle, of course, the network is there. Don't get confused. Don't go to Options Insider Radio. That's the show that kind of started it all. That's our interview show. You can grab that too. Let's go for the full network, the Options Insider Radio Network, and that is, as it implies, gives you everything. Daily news, advisor show, tech show, TWIFO, Vol Views, OB, all the fun stuff that we do here on a regular basis. Boot camp, you may have heard some of those coming out of the shows we did this week. All the interviews we did a ton of those this week for the big FIA show. So a lot of that fun stuff heading your way. Stay tuned. The easiest place to find that, of course, the network, iTunes, TuneIn, Stitcher, all those fun places. Even our website, have it there too, so it makes it easy for you. Of course, you can grab our mobile app available for iOS, Android, and the beloved Fire OS. All right, you can also join us. We like to give a little treat for you hardcores out there. You can join us via Mixlr, MIXLR. So if you find yourself around, available, have some listening time on a Friday, noon Central, 1 p.m. Eastern. We'd love to see you in there. Grab that Mixlr link if you follow us at Options. You've seen it. If you don't, first off, you should be. Secondly, you can also follow us on Mixlr too. It's probably the easiest way to get notified. The second we go live with all of our shows, not just this, but TWIFO or interviews, all the other fun stuff that we do. You heard our surprise boot camps earlier this week that went live. Kind of fun. You actually get to hear those well before they come out on the network if you listen to the live stream there. So a little taste, a little tease for you there. So if you're not following us over there in Mixlr, probably should do so. It's pretty fun. Of course, however you listen, make sure you hit us up. Questions, comments, insights. We do actually like to hear from you people now and then, on occasion, every quarter or so. All right. And joining me on the old program today, we got you got the usual cohorts. Starting off with, let's go back to the corner office. It's been a while since we checked in to the corner office. And we'll check in with the man one day when he completes all of his paperwork, can call himself Dr. VIX. For now, we'll just call him Mr. Russell Rhodes, the man about town over there at the CBOE. Mr. Rhodes, welcome back to the program, sir.
I'm not the man about town. You are. For the third year in a row, I have been excluded from the British consulate event, and I heard you were invited.
Yeah, I ran into another one of your colleagues.
I am participating today under protest and with a little bit of bitterness.
I don't know, sir.
I don't get to do any. I do all the work, and everybody else has all the fun.
I was surprised to see your colleague there, and not you, someone who I've never even met before. So there you go. Just chose the endlessly deep bench that is over there at the CBOE.
Stop doing all the work. So.
There you go. So the deep bench, that was a fun event. Again, that was part of the big FIA Futures Industry Association. So pretty much a nonstop series of events 24/7 for the better part of the past week. So, and we've also been doing a lot of shows here in the studio this week, listeners. So I'm surprised I still have a voice left. Let's see how much show I can get through today. Let's see if we can. Our luck will hold up. As we also welcome on the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line. Mr. Meatball, welcome back to the program, sir.
Great to be here. It's a gorgeous day here. I'm currently in Lombard, Illinois, best Illinois suburb that starts with an L, O, and ends in a D. And it's just a gorgeous day here out in suburbia.
You are just quite the suburban fellow these days, sir. We got to get you from the Carmen Line offices one of these days. But meanwhile, while you're floating around Lombard, we're going to float right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review. Like the name implies, this is indeed the portion of the show where we review some Vol. We review the week that was and indeed still is. And I'm liking my prognostication here. A little bit more downside here. And my crystal ball is looking good for the third week in a row. That'll be almost bullseyes. This is getting a little eerie. But we'll see. Still got an hour to go. Anything could happen. But a nice little more erosion on yield cash certainly would be welcome. Of course, I said we are recording this and streaming it live, noon Central, 1 p.m. Eastern. And middle of the session here, we see most of the major indices up on the day. A lot of green on the screen. Dow and the Qs up about 0.4%. Excuse me, the S&P and Qs up about 0.4%. Dow leading the charge to the upside. Not often you see that, up about 0.5%. And of course, all that green, the pending weekend means a little bit of red on the old VIX cash green, down about 980 or so right now, off about a quarter of a handle on the day. It's been an interesting week. Maybe before we even get into the week that was, I thought maybe it'd be interesting to opine a little bit. This was, of course, a historic milestone for the markets. Some people may not know, also maybe a historic milestone for the world of options and indeed for the world of volatility. In fact, I think you could argue that the modern options market was really born 30 years ago on the 19th, 30 years ago yesterday. Of course, Black Friday, that's shopping day. Black Monday, as everyone knows it, everyone knows it as a big sell-off, but that was also a tumultuous turning point in the world of options, otherwise known as the day where everyone kind of woke up and scratched their chins and said, maybe there's this thing called skew out there in the options market. So a lot of the things that we know today, a lot of things we pretty much take for granted today as options traders, things like volatility skew, a fundamental way that we look at and analyze and trade options, really didn't exist prior to that. You know, you hear some arguments, some people had a paper here or there that kind of broke it down, but certainly not in any broad mainstream or trading capacity was skew even really a concept. So I think it's a more auspicious day. It gets a lot of negative, obviously, connotation. It certainly wiped out a lot of value, so that makes sense. But from an options market perspective, you know, I think it has an interesting aura. I don't know, Russell, you're kind of the keeper of all things volatility history on the show. What do you think about when you look back 30 years on the old Black Monday?
Well, I was in junior high, so I really wasn't trading much.
Well, I'm not saying I wasn't trading either. I'm saying more from a historical perspective.
You were in junior high.
I was in junior high. So
were you really?
It took me a while to get out of school. That's another story for another.
All right. And now look at you, you're a big PhD.
Not quite yet. So, you know, it's really interesting to take a look at a skew chart from 1986, because we wouldn't have even called it a skew chart. We would have just said, look at that pretty smile. And after we all of a sudden had this 87 crash where, you know, everybody that had been selling those out of the money puts suddenly got surprised, and they honestly did. and not so much, a historical look at the skew and the change of the curve, but I've been talking to some of these guys that were around back then, and like today, and I'm just going to use Bitcoin as an example. There are people that will always be saying Bitcoin's a bubble, it's going to fall apart, but we just don't know when. And I've asked the question of a few people that were in the OEX pit in '87, were you guys ever standing around going, someday we're going to get absolutely run over selling these puts? And the answer was no, nobody ever thought that was going to happen. So it really was kind of a big surprise event there. As far as fast forwarding it 30 days, what's been kind of interesting is to listen to people come up with the modern day equivalent. What could happen that causes a waterfall 20+% drop in a single day? And I can't come up with anything. Even a worst case scenario, I can't come up with anything. And I guess we've just been conditioned to believe that every sell-off is a buying opportunity now.
That is indeed the case, and you're right. There's the old saying that that Black Monday wiped the smile off the options markets forever, because it did. You're right. Before that, it was kind of pretty much that old volatility smile. Everyone kind of just threw it up there. It was kind of just the general rule of thumb that you used when pricing up options. That's how they looked from a volatility skew perspective. And then lo and behold, 87 crash happens, and people start saying, wait a minute, that's not exactly how things played out. And lo and behold, here we are. Mr. Meatball, obviously you trade a volatility fund, so this is a concept that is near and dear to your heart. What do you think about 30 years ago yesterday and the impact of Black Monday that lingers today, sir?
I told a couple stories yesterday on Option Block, and I think everybody should listen. I remember where I was on Black Monday. I was Halloween costume shopping. I was deciding whether I wanted to be Optimus Prime or He-Man or some sort of ninja. It was quite the day.
Two out of three good choices there, sir.
Exactly. Well, the ninja I think I may have ended up going with the ninja.
In the 80s, ninjas were pretty sweet. That's true.
Yeah, they were kind of a big deal because this was karate was really popular at the time, but we had not yet been introduced to the famous Italian artists who were also turtles. An entire generation of people firmly believe that Michelangelo is a turtle and not the guy that designed the Sistine Chapel. It's amazing. But what I would say is there's a couple of things. If you talk to academics and professors and those involved, they will argue you for a long time. And, Mark, you and I got into this with our friend at IIT, that skew really shouldn't exist, in that, if anything, calls should be more expensive than puts most of the time because of interest rates, things like that.
Yeah, that was a fun episode. Go back into the archives of Volatility Views for that one. You want to hear an academic holding court, quote unquote, on the practical aspect of the options market. Yeah,
he was like, "Oh, what's this idea of supply and demand? That's not a thing. It's all and it was ridiculous." But there are some good reasons for that. I mean, if you look at it, even just watch the financial news, right? If you come on and you're short, you are basically presented by financial media as the bad guy, right? I mean, you are the bad guy if you are short. All of these funds that come on, Muddy Waters, they're like, oh, Muddy Waters is out to pour muddy water on everybody. I mean, it's amazing, but you call for the market to go down and you're a pariah. And why? Well, everybody in the world is long. Pension funds are long. Retirements are long. Everybody is long. And it kind of shocks me that up until 87, nobody had thought that, boy, everybody in the world is long. Maybe I should own puts. And yet nobody thought to do that. It's pretty phenomenal that happened, but that is the way it went down.
By the way, if our listeners are joining us live, they get to participate in the fun. I just tweeted out there a contentious poll. What was the coolest costume of the 1980s? Optimus Prime, He-Man, Ninja, or other? So get your vote in now. You only got an hour, so only live listeners can play. So far, Ninja leading with the first vote. We'll see how it goes.
I like that. That's amazing. My thought is that that really did wake people up to that, trading is not just, what is the volatility and I'm going to trade around it. It's also a concept of supply and demand, and you can push things to the point where, you have to move pricing. You can't just run. Volatility doesn't move uniformly across the curve, which was the way everything was priced prior to that. And I think that's kind of the big difference.
Yeah, definitely a watershed mark. So in all this, negative coverage, and you're right, it wiped out a lot of wealth. So I could certainly see why it has that perception. It's got that very sinister name, Black Monday, even though Black Friday is kind of maybe usurped it a little bit in the modern mindset and mind share. But still, for options traders, it was a very important day. And also, a lot of the modern options market was born that day. And a lot of the groups and trading firms you're probably familiar with today, it was kind of a clear demarcation at that point. A lot of groups got wiped out, and the ones that were left ended up becoming the Susquehannas and the Hulls, which became the Goldmans, and and Timber Hills and others. These are kind of the names people are familiar with, and those are kind of the survivors of the wreckage of '87, became kind of the modern infrastructure for the options market. So a lot going on there, perhaps behind the scenes, more so than just this great erasure of public wealth and capital. Let's move on to, if you have your own thoughts on the history of the impact of '87, you probably do, especially our older listeners, on the options market, feel free, hit us up. Let's move on to the week that is right now and has been kind of an interesting week. We saw VIX cash kind of flirting ever so briefly, breaking through into the double digits, and then kind of just saying, yeah, no, and then coming right back down the downside. Like I said, we're still hovering in the high single digits, but the single digits nonetheless. We broke through briefly again today, and yet couldn't keep the level alive. So we're back down in the single digits. Stay there for another 45 minutes or so, and I'll be really good. Let's see. Skew index also almost like we kind of just did a copy and paste from last week, even though the indexes have marched along since then. 146, so high, but not kind of danger zone yet for those of you who are Skew index followers. Let's start off. Let's go back around the horn. Let's go back to Mr. Rhodes. When you're not pontificating on historic anniversaries, sir, what was catching your eye this week from a regular old normal volatility perspective?
I thought we were off to the races. Yesterday morning, man, I thought the time was finally starting to that we were going to get out of this VIX funk, but it did not. It just felt a little bit different Thursday morning. You were searching around for a reason for the Dow to be down 100 points or so, and there wasn't a really good one, which I thought might indicate that people are starting to sell out of some logic. But lo and behold, once again, we get the buyers on weakness and the sellers on volatility strength to come into the market and put us right back in our place, which is in the corner of single digits. Nobody puts baby in the corner, sir. So a lot of other things popping off this week. Of course, we got AAPL coming off the board from a futures perspective. So we got Nova out there. So that chasm, that gulf kind of widening out there yet a bit again with the cash to the front month, about 1.5 handles right now. And a little over two for 2 months out there, about 2.25 or so out there. So still a little wide out there. Mr. Meatball, I know that's probably catching your eye. That and what else is catching your eye out there this week from a vol perspective, sir?
Yeah, it was interesting. We got over 11 briefly, and we had a real kind of selling event for a minute. The NASDAQ was down over 1%. And volatility got a little bit of a pop, and like Russell said, they bought the dip, they stepped in, they said, you know what, this is silly. And then we've had follow through because, the VIX, or excuse me, the House passed, their budget. So there goes another reason for volatility to be higher. And there's just right now there's just not a lot on the plate that people think could cause a problem. And if that's the case, then give me a great argument for the market selling off, and there aren't a lot, and that is gonna hold up vol. Vol has a really difficult time selling off when there's not a lot of great reasons to sell off. I know it sounds redundant, but we spend so much time saying, vol should be higher, vol should be higher. Why? There's no reason. Without, we need a catalyst. Maybe it'll come from credit, something like that. My guess is, Russell was asking at the top of the show, where could we see a real problem? Credit is always going to end up being where real problems come from. It's not going to be something that's created in the equity market. It will come from the credit market. That I'm almost certain. And in this case, maybe U.S. Treasuries get really soft. I could see like a swift mechanical sell-off. I mean, if you look at the way the 2008 happened, now that wasn't a single day 20%, but the market did lose what? How much did the market lose over that year period? Almost half, right? Something like that, Russell? Maybe more?
It was about 40%. I think peak to trough, 39%, 50%, something like that.
Yeah, it was really ugly.
A lot. How about here's a quantifiable thing for you. It lost a lot.
Yeah.
But to what you're saying right now, it showed up in the credit markets first.
Yes.
And I think you're dead on. I think it'll show up there as well. I heard yesterday morning. I heard somebody talking about the credit default swap market, which is a lot smaller than it used to be, and apparently Deutsche Bank credit default swaps tripled.
Oh wow!
This past, but it tripled on a really, really small trade because there's no liquidity in that market. I know, it's like that's the kind of thing that would have gotten us really excited 10 years ago. So the thought that I had after hearing that was, so what do we pay attention to in that market since there's too much noise in where it appeared 10 years ago.
Yeah, I mean, I think you're gonna have to look in. I think you're gonna have to look in the listed market. What I think will be interesting, and what happened in 2008 that everybody talks about the stock market. It was the bond market that really went haywire. You had these perfectly good AAA companies like at the time GE or names like that, where they were never going to go out of business. And they're AAA rated, and the spread between them and the treasuries was just, you could drive a Peterbilt through. So where I think that there's real risk is the fact that most people hedge their interest rate risk with the treasury. So as yields start to rise, what do you do to hedge off? So if yields start to rise and I've got I own bonds, how do I hedge my portfolio now? What's the standard way to do so, Russell?
If you're expecting yields to rise and bonds to drop, the way that you go about doing it, well, God, I mean, you can just do it with broad-based index. That's the first thing that always comes to my mind. Is just using broad-based index out.
A lot of guys use the 10-year note. They use 10-year note futures.
Yeah.
And what happened last time was a ton of guys were pressing into that. We were seeing that, guys that were, as bonds were kind of exploding, the 10-year note was not moving because people were terrified. So you had the 10-year note rallying while corporate bonds and things like that were actually selling off. And that's where I think the risk is that you see the basis just explode. And that is, we are, with how low the yield is in junk debt, that is where we get our big sell-off. That would be my guess, Russell.
I don't know. I think the chat room's not buying it. Tech Coleslaw saying, he says, you guys are wrong with credit. He says the problem will actually come from the simplest place, duration. You can maybe argue different side of a similar coin there with duration, but still. But he agrees hedging with treasuries because sometimes that's what's bad for equities is also bad for the bonds. He is indeed correct there. But he says credit spreads won't be the next problem. Interesting stuff. You guys mull on that while we keep on mulling into our next segment, because it's time for Mr. Rhodes to take us on an odyssey. Yes, it's time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
All right, everybody, time for Mr. Rhodes to hold court. Really quickly at the top there, Mr. Rhodes, if you have any response to that, feel free. Then you got 28 minutes to hit us up on all things VIX Weekly Options, sir. Go. The clock is ticking.
Well, first off, I don't necessarily think that the credit market will be the cause of a sell-off, but I think it's a place that you can pay attention to and might get an early signal that we're getting the sell-off. So I wanted to clarify.
and that it could be a symptom. It'll show the symptoms first, and like what really caused the '08 sell-off was housing was way overpriced, not the credit market, but the credit market was the credit market was the measly bumps
Exposed to it. Yeah.
And that was kind of the way that worked out. I agree 100%, Russell.
Okay. All right. Now we move forward with weeklies. Dun dun dun. I can't wait to get toward the end of the list because there's a really interesting trade, and that's going to be the blog this weekend. Monday. Again, this was an expiration week, so there wasn't a whole ton on Monday. Usually there's a little bit more activity. The structure that we all love here. Somebody sold the 200 of the November 8th 10 puts and took in 25 cents. Bought 200 of the November 8th 15 calls for 45 cents and completed the trade by selling 200 of the November 8th 20 calls. When you pay 45 cents and then you take in 45 cents, you get nothing and like it. And that trade was actually done at no debit or credit, just a little bit of a commission.
Interesting.
Also on Monday, somebody sold 100 of the October 25th 12 puts for $1.95 and bought 100 of the October 25th 9.5 puts for 11 cents. 184 credit and a break even of 10.16 if they hold it to expiration. Nothing on Tuesday. There was one trade, but it looked like it was a rolling transaction, so I just decided to let it go. Wednesday, somebody sold a call spread, sold the 100 of the October 25th 11 calls for 37 cents, bought 100 of the October 25th 14 calls for 14 cents, net credit of 23 cents, settlement below 11.23, again, if held till settlement, would result in a profit of 23 cents. And then, which is the credit they took in. Somebody also sold, and this is a bullish spread, sold 100 of the October 25th 10.5 puts for 61 cents and bought 100 of the October 25th 9.50 puts for 9 cents. Credit of 52 cents and settlement above 9.98 works out for that trade. Another put spread, but looking for a lower. This is the other side of this trade. Not exactly, but the attitude about it's the other side of that trade. Somebody bought 100 of the October 25th 10 puts for 27 cents and sold 100 of the 9.5 puts for 6 cents. Paid 21 cents for the 10 9.5 put spread. They can make 29 cents if settlement comes in below 9.50. That's what they're hoping for there. Thursday, a butterfly that I hope's got some other stuff going on because this is a funny trade. It's a butterfly using the puts. They bought the 10 puts, sold the 10.5 puts, and bought the 11 puts. I think these are November 8th options. I forgot to write the date down, but they did this 50 cent this butterfly. It cost them 13 cents. A settlement of 10.50 gets them a 37 cent profit, but I hope there's something else going on there because that just didn't. You've got to have a really specific outlook. I mean, they've got to be much better than I am at the crystal ball if they're going to work out, if this one's going to work out for them. Somebody bought 100 of the October 25th 10 puts for 13 cents, sold the 9.5 puts for 3 cents. Maybe they were adding to that previous trade. This time it only cost them 10 cents, and that was on Thursday. This is the trade that's got me all excited and looking forward to writing something up this weekend. On Thursday, somebody basically did a synthetic long with October 25th puts. They bought the 12 calls for 36 cents, sold the 12 puts for $1.52. That gives you a synthetic long with a at $10.84, I guess is the way to put it. And then they also bought 100 of the October 25th 11.5 puts for $1.09. So they basically created a synthetic, call option using 3 different legs. And I thought there was one more trade. Yes, there is. There was a 1x2 in kind of an unusual way. Somebody bought 500 of the October 25th 11.5 puts for $1.21, and they sold 1,000 of the October 25th 10.5 puts for 46 cents each, or 92 cents on that leg, which gets you a 29-cent cost and a profit on the trade as long as you're under around 11.31 or so. And no good trades today.
No love
but
today.
Also,
today.
I make sure I ceded more time for questions.
Yeah, there's a lot of, I think you unpacked a lot of interesting stuff there. I like a lot of it. I think maybe the first one might still be my favorite. It's kind of funny because it shows kind of the regime we're in now for volatility, where, you used to hear bullish risk reversal in VIX. You didn't hear them that often because the puts weren't juicy enough to really merit selling. But now it's kind of funny that, you hear that strategy and you like it, and that's a no cost one with a collar or with a kicker. But yet you're a little concerned about the put leg, which perhaps maybe that speaks to where we are now with VIX land. All of a sudden, the VIX puts are a credible threat, whereas a long time ago, that would be like, oh, that's just free money. Sell all those downside puts to buy all the VIX calls you can, because that's how it works. And these days, maybe not so much. But I do like that one. Now, a lot to unpack there. Well done, sir. Let's move on to the big VIX mothership as well. An interesting week. By the way, Mr. Rhodes, are you getting a little nervous? Because I know that... I know you said before when the VIX call to put gets north of like 3, you start getting nervous. We hit over 4 this week, 4.1 to be precise. So did that give you the cold sweats, the heebie-jeebies?
Hide the children.
Hide the children. Hide your kids. Hide your wife.
Dogs and cats living together. Mass hysteria.
Everybody look out.
We've hit over 4 in the back. Russell can breathe a sigh of relief. Today it is back down under 4. Only a slight 3.9 to 1 calls over puts. We joke, of course. A lot of people like to pay attention to that. I guess gotta get a little bit north of that to really start getting on my radar. But Mr. Rhodes, he's more easily concerned than some of the rest of us. So perhaps he has some lingering fears. A pretty active week, all things considered, for the big VIX mothership options. ADV, a hefty 863K right now. And almost every day this week, except for a couple, we're pretty much over that. 962 on Monday, 1.3 million on Tuesday. So that's why I was surprised we didn't see any commensurate big action there. In the weeklies, Wednesday, 786,000, Thursday, 724, and today about 420, so on tap for maybe making the ADV. We shall see. Be pretty close if it doesn't break through. Like I said, 4.1 to 1 actually it was. Calls over puts. In terms of what's lighting it up out there, the top 10 hot VIX strikes. Yet again, the VIX whale, I think for lack of a better term, is dominating the charts. And also, I think you can see he's probably generated a little bit of Me Too fever out there, because as you saw last time, his strikes tended to become very popular strikes. And that's what we're seeing now, as either there's a lot of close, but I don't think that's the case. I think it's more a sense of others are gravitating towards these strikes because we're seeing these strikes continue to move up the list. D's 25 has always been at the top of the charts, but the others are now. In fact, the top 3 of the top 10 are all his strikes. So number 1, spoiler alert there, number 1, the D's 25's 619,000 contracts open. There, number 2, drop off a little bit, but still hefty. The D's 15's 453,000, again part of that 3-legged trade. And the other leg, the put leg, the D's 12 puts coming in another 3 with 351,000. So those top 3 strikes alone pretty much accounting for that big crazy. Remember, we rolled it from October to D's a little while ago, listeners. Others clearly liking those strikes because they're piling in. Number 4, the Nove 20s, 316,000. Number 5, we dip just below 300,000, 299 to be precise for the Nove 17 calls. Number 6, the Nove 21s, 278,000. Number 7, D's 22s, getting out to D's, a little bit of upside up there, 227,000. Number 8, the Nove 15s, the comparatively reasonable Nove 15s, 226,000. Number 9, the Nove 18s, 194, kind of a Goldilocks strike right in the middle there. And rounding out the top 10, the Nove 23s, ever optimistic Nove 23s, 188,000. Total about 9.8 million. Options open about 7.8 on the calls and about 2 million on the puts. Mr. Meatball, before we move on into the ETP range, anything else catching your eye in the big VIX mothership options this week, sir?
You know, we did see a big trade from our friend 50 Cent. I think he bought the December 21s for 48 cents today.
You love that guy. You know you're piggybacking on all his action, right, at Carmen Line?
It has been a really slow week. It's been hard to find things to do. I think Russell maybe – I may have missed it, but he may have reported on one of my trades. I've been trying to do 10.5, 10 put 1x2s, buying 1, selling 2. And, that has been – interesting in that it's amazing. Like, I was thinking about it a couple of years ago. I did like a 10-11 put 1x2, or not a 10-11, an 11-12 put 1x2 for even money, because I said to myself, well, what's the odds of a VIX ever settling below 10? And laughably, we did not end up that way. We absolutely can get below 10 and settle there. We had 4 settles in a row before this week of VIX below 10, VIX settling 1053. Did not see a lot of other really fascinating trades other than that one, and a few other small trades, but a few risk reversals, but nothing really spectacular. It was an exceptionally slow week. Even on that day where VIX popped, we didn't see a lot of buying. It kind of felt like everybody was fading it before it even began.
Speaking of fading, let's move on to everyone's favorite ETP out there in VIX land. VXX taking it on the chin again today, off about half a handle, down getting into the low 30s already. So all of that erosion everyone's talking about, a lot of it already haven't come to pass. It was in the mid 40s not too long ago. Listeners, so you've listened to this show and you started maybe looking at eyeing some downside puts, then things perhaps are smiley in your neck of the woods. Perhaps even like a certain Meatball on this show. Mr. Meatball, can you go out on a limb and take a guess at what the number one open interest position for this week is, sir, out there in VXX? Just take a flying leap.
I'm going to guess that it was the exact same one as last week, which is the January 2019 10 puts. That's going to be my best guess.
Some might say those are genius. Would you agree?
Yeah, I'll tell you. This is kind of funny. After our show last week, where for those of you that are interested in sponsoring Volatility Views, or for our current sponsors of Volatility Views, I would more say, for those of you that don't think it drives business. I got done listening to the show. I went, boy, those VXX 10 puts make a lot of sense. So I bought 1,500 of them in the fund for 25 cents.
You're the reason the OI is up so much this week. It's you, sir.
Yeah, well, and then the funny thing is, I call the Dash guys. They start shopping it. They fill me, and then a couple of guys they shopped went and piggybacked, and I think they ended up putting up another 3,000 or 4,000 of those puts after I got done, which was hilarious.
So we'll be expecting our sponsorship from Dash any moment now, driving all of their VXX downside put action for the week
Dash
out there.
Well, now what we need to do is get everybody listening, and then the volume will just explode on those 10 puts. As if it couldn't explode
$250,000.
more.
See if we can get for $250,000 next week. But it does show the mighty power of this show. In fact, I think we're probably contributing a lot to those Tesla garbage puts that continue to go up every day as well.
I think we are.
We're keeping the love alive, or perhaps the mystery alive out there. But yeah, I was kind of with you. I was kind of scratching my chin on those as well. I didn't pull the trigger yet because I've been kind of busy with FIA this week to load up. But I don't know. The strike may seem a little bit maybe a bridge too far, but I do kind of like it. And there's a theoretical part of me that kind of just likes the notion of 10 out there in VXX. So all you out there playing the erosion game out there in VXX. We won't get into why it erodes. That's a whole conversation for another day. We've done it many times already. But it is eroding. So look at it. Keep an eye on it. Maybe for some of your longer term trades in IRAs and whatnot. Perhaps a vehicle doesn't have to be these 10 puts. Could be whatever you choose to do. But keep an eye on it. It's worth noting out there. Also, XIV coming off up about 5 points higher than last week, 106 or so. UVXY about 1.5 handles lower, about a little shy of 16 out there. You know, we could get into this. Let's see. You know what? Let's let the folks have some time. So we'll table this discussion. It's a good one though, about FINRA smacking down some financial advisors because they don't know what the hell VXX is. They don't listen to this show. So we'll table that maybe for next week when we don't have things like Black Friday and everything else kind of eating up our time. But it's a good one. This is they should listen to this show because we say this all the time. Don't put people in long-term VXX. It's not a long-term buy and hold. These guys didn't listen. Wells Fargo getting slapped almost $3.5 million because they don't listen to this show. That's their own fault. All right. With that said, let's keep on rolling right on into the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, Mr. Meatball, before we get into the listeners, your poll, Fast and Furious here. It's got a little few minutes left. It was a short, brief poll. What do you think is winning our Halloween costume palooza?
Let's go, Ninjas!
You're correct, actually. Ninja is still in the lead with a third. 33%, a tie. Optimus Prime and He-Man tied at 22% each. Oh, actually, other winning. We got a few interesting write-in votes. One for B.A. Baracus. I can get behind that.
Oh, I can get behind that too.
And then one for Elvira. I don't. Maybe. I guess the ladies got to be represented as well. The mistress of the dark. You got to have some love in there as well. So we'll be equal. We'll be equal.
Came down to, when I was a floor trader on the Amex, she actually came down and rang the closing bell, and then walked around. And it was, I'll tell you, she was exactly the way you would have expected. It was around this time, I want to say in maybe 2004 or 2003 that or Gil Elvira. It was one of the other times that the VIX was around 50, and Elvira was there to say hello to the world.
There you go. 2004, perhaps past peak Elvira, but still a worthwhile sighting nonetheless. Let's move on to what we were actually asking you guys this week. It's the middle of earnings season. Things are just kicking off, popping. You guys have all your thoughts on what you like to trade. If you do like to trade it, we've often said maybe you want to avoid it. But if you like to trade, and we know you guys do, which names do you plan to trade most actively this cycle? And if we didn't list your favorite, because everyone's got their own favorite, hit us up. You guys have some interesting ideas on that. But we gave you 4 choices, as we are wont to do. We said the old standby: Tesla, hate it, love it, whatever your opinion is. Also, Amazon, hate it or love it. A lot going on there, too. Apple, also hate it or love it. And ye old Alphabet / Google. I don't know. You don't get as many haters of that one, it seems like, but we never know. Mr. Rhodes, you're the big earnings guy. Which of these is, if you have a pick, which one do you pick, and which one, more importantly, do you think is capturing the hearts of our audience?
Alphabet and Alphabet. Alphabet. That's what it's. I feel like, they used to report the Thursday before standard expiration, so I think a lot of people are conditioned to trade that one.
Yeah, it's kind of mixing it up this year, this cycle. Netflix kicking things off before Alcoa. That kind of seems wrong to me. But hey, c'est la vie, the new order that we're in. Mr. Meatball, what are your thoughts, sir?
Yeah, this earnings season is really weird. Apple has moved their dates back. Google has moved theirs back. I feel like Google lost a lot of its interest when they split into 2 companies. When it used to just be, boy, what's going to happen with search and all the other crud that they do? Now it's like, you got these 2 stocks, nobody's sure what to trade, the options are split all over pieces. I think I said last week the one I would be most willing to trade is Apple, and I believe and my guess last week Tesla was winning. I'm going to go out and say, between now and what happened and yesterday when Amazon was allegedly in the lead, I'm going to say Tesla is back in the lead.
I'm with you on Alphabet losing the luster, and our poll certainly backing that up. Only 16% coming in with any love for the Alphabet. It seems like ever since they kind of split, all of a sudden people are like, which one is it? Is it Goog? Is it Google? Alphabet isn't really a sexy. The whole thing is just, I think that's kind of, you're right. I think it's taken a little bit of bloom off the options rows and confusion as well. They still do a lot of volume, so I don't think they're complaining, but still. Yeah, certainly from our audience, no love there. Number 3, going from bottom to top, number 4, Alphabet. Number 3, Apple. 23% only for Apple, so kind of shows how far Apple maybe has come off from the hate. A few years ago, this would have been 80% Apple. So yeah, how much that has changed. Number 2, I should say, Tesla, 27%. Number 1 being the big A and the fangs these days. That is Amazon, a ticker symbol, of course, AMZN, 34% out there. You guys have also written in with some interesting others. Must be a listener to this show. Milton FMR Institute says they like VRX. Good old Valiant. Maybe an option block listener too. We talked about that one before. That one has certainly delivered the vol, shall we say, of late. I think the Rock Lobster reminded me of this. It may also be one of the more infamous trades we ever profiled in the odd block ever, because we highlighted a short strangle that just was so instantly in their face for like 100 handles that it was fairly impressive. Almost, we didn't have time to almost even to read it aloud before it was 100 handles in their face. It was a terrible, terrible trade, and still probably one of the worst things we've ever profiled on the odd block. So Valiant has a special place in our hearts for that. We also got MoneyEngine X3.5. Say that 5 times fast. Saying they want to buy CBS calls. All right. Hey, to each their own. All kinds of fun stuff. Let's go here. Let's hold off on the other one, the after hours. I think you guys we went on that in boot camp earlier this week, and you guys, I think, discussed it yesterday on the show. Philip, this is from the live chat. Philip, I'm going to butcher your last name. I apologize. Momsalov. How about short DEES VIX 12 puts and long DEES VXX? Okay, I see what he's saying now. VXX 35 put. I guess he's just throwing that out there as a strategy suggestion. Interesting. We've talked before about doing some ARB, VIX to VXX. It kind of gets into some of the areas. I don't know. I think Meatball, I know you like ARB, or at least watching the relationship between the two. I don't know if you'd be too keen on shorting that DEES put. Is that one in your bag there? The DEES VIX put, I should say. Mr. Meatball, sir.
Yeah, I mean, that's a fine idea. I think anytime you can do this stuff with a hedge, if I can reduce the volatility, I'm all about it. And that's really what this person is talking about. Is there a way to reduce the volatility? And there are. I love long VXX, and generally speaking, I like long UVXY strategies even better, or long put UVXY strategies better. I like VXX strategies. So any of these kind of spread off the risk ideas, they tend to work pretty well. One thing that we kind of looked at that we like is because of the curvature of VXX. Buying kind of an in-the-money straddly type thing, and then buying like converting the call side into like an inexpensive butterfly, we've liked a lot. But anything you can do to kind of lower your risk exposure, I think is worth doing. These things seem like easy money until you look at like a 2011 when a name like XIV over a 6-month period went from, I want to say, like 16 or 17 to below 4. That could happen. So in a 2011 type scenario, UVXY goes above $200 probably. VXX probably makes a run at 100, and XIV drops from it's 150 price to probably 30. So everybody talks about these like they're free money from the internet. They are not. There is risk.
Oh, but there is free money from the internet. I'm not sure if you should take my my course one day, Mr. Meatball. Free money from the internet. It's good. It's good. A good course. We got so many people write in, but I like to get the people who are listening live a little bit of preference. So there you go. That's your incentive, folks who write in after the fact. We like you guys too, but we tend to give a little shine to the live folks. All right, I'm even going to violate my own rule. I'll let Tech Coleslaw ask another question. He's asking here, does it feel like the VIX futures curve is flattening? How flat can it get with the VIX cash, with the cash VIX at 10? This is something we talked about a lot. We've said it pretty much almost every show. Obviously, the front month came off earlier this week, so we're kind of back to that little bit of a gulf again. But this notion that the futures are reticent to kind of catch up to the cash is something we've been talking about for a while. I think we were just last show we were talking about even back to AUG. We were saying how reticent they were to crush the AUG future. It was hanging up north of 12. It was like 12.20 and stuff for a while the cash was ever approaching single digits. So this is kind of an issue we've seen for a while. I think I hate to call them more rational, but it does seem like the futures traders they're a little bit slower to really join the party. It takes a lot for them because they know they're not going to squeeze all the juice out of the sponge right away. They got to let it breathe a little bit, and so I think we see look what happened. What we just saw with the AUG future, how long it took for that to finally catch up. I think we'll probably see, unless they've got religion out there, I think we'll probably see a similar path with this next month here, Mr. Dr. VIX. This is kind of a common refrain for us here. When is the futures term structure going to catch up? What are your thoughts here for Tech Coleslaw?
Well, if he's asking the question, like the way that he did, he might be taking a look at December, which is just a hair over 12 right now, and you got to keep that seasonality thing that we'll probably mention every week between now and December expiration, where you've got several extra days to off between December settlement and the strip of SPX options that December will that the December settlement's going to be based on. So I think the way you started the question was, is it flattening? And it always flattens when October goes off the board, just because of a seasonality factor that puts a little pressure on December.
Mr. Meatball, any thoughts here on the VIX futures term structure? One of our favorite topics. We've said many times the answer to pretty much all volatility questions lies in the VIX futures term structure. What do you got to say here for our friend, the Tech Coleslaw? I kind of like that handle. Well, Mr. Meatball, he's dead.
I think we lost
us.
him.
Mr. Meatball, are you dead to us, sir?
I think we lost him, which
I think
means we get to make his guess.
I'm here, and I agree.
Oh, there he is.
Oh, shucks. He was going to say, he was about to say that the futures never flatten, and you should never ever think that. That's what he's about to say.
No, it finally happened. Things had been so steep for so long. The one thing I would say is, and I think I've said this a couple times, they've gone overboard with December. I think December futures are way too cheap, given where January is and some of the other names and what's behind it and really what's in front of it. The idea that seasonality is a foregone conclusion is utterly ridiculous if you look at the way things have worked out over the last 4 or 5 years. Yes, 12 or over the last 25 years, seasonality has worked really well. But I think that if you look, seasonality has not worked as of late. There's always been a decent pop in VIX. I'm gonna sound crazy here. I'm gonna sound really crazy. But I think that if I bought a future in VIX in December today, between now and December expiration, I will get a chance to sell it at I will say a minimum 10% price increase from here.
Minimum. There you go. Man's giving you a minimum guarantee.
So I will take $1.25. That's my guess.
A minimum guarantee. You don't get those very often here. on the old Vol Views. Of course, we got to keep on rolling now into our final segment. Great questions, everybody. Sorry we didn't get to your other questions. Keep them coming. Read them all. We'll try to get as many as we can onto the show. As we keep on rolling into our final segment, it's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, you guys know the drill. This is the portion of the show where we just embarrass ourselves. At least Mr. Dr. VIX does. His ghost was wildly off base last week as he had the temerity to send in his doppelganger in his place. As we wind up the show here, let's see how we're sitting. Kind of about where we were before, a little bit higher, actually, 987. That still puts me in, actually, no, that would actually put our guest person, Kevin, in there. That's what I get for being nice and letting him go first last week. He wins it with the 10. I was number 2 there. He was off by about 12, about 0.12. I was off by about a third, not even, a little less. So there we go. Shucks, I was so close. A little bit downside, and it would have been mine for the third week in a row. And then Mr. Meatball coming in on the tail there, 10.25 to the upside. And the ghost of Russell just embarrassing himself, going super crazy to the upside, picking a 28. I told him that was a little bit too high. He ignored me, and so that's what you get. All right, so Kevin can't be here. So you know what, Russell? Because you pick so high so often, and it's so hard for you to win under that mantra, I will allow you to have your colleague's victory. I will allow you to go first if you like, or you can choose who goes first. Up to you, sir.
Oh, I'm gonna go. I'm going first. Here we go. Let me look at, where are we? We're at 984.
Yes, ma'am.
Let's see what goes on next week. That's it. PPI, CPI. I'm gonna go for 987.
So the old unched. When in doubt, Mr. I should probably put that under Russell. It's not marked. That would be better. There we go. The old unched. That's actually surprisingly low for you. So bear that in mind, listeners. He's not picking a 12 handle or something out there. So you should be perhaps a little bit concerned. All right, I got second, so I shall go second. Let's see. Now I was liking these levels, but you know what? I'll let so I get to let Mr. Rhodes go first, the gentleman that I am. So I shall move myself south. I liked where I was last week. I think I was a little low, though. I like back where I was 2 weeks ago better. 965 is where I'm going in for next week. Mr. Meatball, deal with that. A 0.22 differential there. Get in between if you dare.
965 and 987. I'll tell you what. I think that you guys are going to be right on the settle, but wrong on where we are Friday. I think that, we didn't talk about the nasty move that bond yields made this week, and I'll be interested to see. I think that sometime between now and Halloween, we're going to have a real good idea of who the next Federal Reserve chair is, and that could drive things. We also have a ton of earnings. At the end of next week is a Friday. That'll be, the 28th? 27th. So we'll have a nice chunk of earnings out, but not all of them. And you'll also have Apple reporting on the 26th after the bell. They're going to miss. People are going to be scared. They're going to be worried. They're going to go, oh, Apple, no! And we will have the VIX booming higher to 1016.
1016 says the Meatball. All right, we'll have to put that on the docket as the music kicks in, giving us the hook for at least for this show this week, listeners. But if you're out there listening live, stay tuned. We're going to retool a little bit and then come back at you with a lot more volatility, talking on the futures option side of the fence. So maybe the big indices, a lot of crude, of course, gold, and other stuff. So come back in here in about 30-odd minutes or so, 1:30 Central, 2:30 p.m. Eastern, for TWIFO this week in futures options. But we're not quite there yet. Let's go around the horn one last time. See if I can get this music. There we go. That's a little better. Now I can hear myself think. All right. Let's go around the horn, see what's cooking. Let's start in the land of the newly Christianed CBOE. Mr. Rhodes, what's cooking in the land known as CBOE?
I am going to be in London next week visiting CBOE Global Markets customers in London. Also doing some follow-up meetings from the CBOE Risk Management Conference a few weeks before. I just booked my tickets for Asia RMC, and I want both of you guys to listen very closely. I got round-trip business class to Hong Kong for $3,100. So I think you guys can come along. Now I have to go Dallas to Vancouver to Singapore to Hong Kong, but I did it. I got a cheap flight.
Dallas to Vancouver.
Are you kidding me?
Wow.
I'm not kidding you. You know how many miles I'm going to get for this?
That's going to be so many miles.
Yeah!
Be half dead by the time you get to Vancouver. It'll be good.
I know.
All right, well, there you go, listeners. If you're intrigued by that, check it out over there. The newly rechristened, is still the same URL, though, CBOE. So don't you dare say CBOE anymore. It's CBOE. CBOE.com to learn more. Check out the blogs of Russell and the crew, Kevin, everybody else, like the whole court there with some great stuff, especially over the weekends. Mr. Rhodes been known to post a thing or two on the old blogs over the weekends. And if you want to look out for the risk management, look up CBOE RMC. That'll take you to the risk management homepage, and you'll have Asia there, you'll have Europe, and of course the forthcoming U.S., which I believe is back in Florida next March. So you don't have to go all the way to California, Florida, if that's easier for you. And last but not least, Mr. Meatball, when you're not busy scooping our trades here for your own fund, what else is cooking in the land of Option Pit and Carmen line?
You know, what's funny is I'm wearing my Options Institute running shirt right now, and I walked into an REI to buy a tent. And the clerk, the guy who I was working with, looks at me and goes, CBOE? And I said, it's CBOE. And he goes, and then I looked at him and realized that he was a clerk for one of my brokers for a long time. So kind of funny. But I had to explain to him that it's no longer the CBOE.
Good to see you repping the new brand. Got to rep the new brand, sir.
Yeah, well, and I said, well, how are you liking things? He goes, REI's the best. So, anyway, we are going to be doing our, if you look out on, check your email, we are doing a credit and debit spread webinar on, how to trade them properly, call spreads, put spreads, in the money, out of the money, how to make money trading them, this Tuesday, the 24th. I just put out my first email about it. You can also go to our blog, www.optionpit.com/blog, and you can register right there on the blog, and right below that is my trade idea of the week, my Option Pit idea of the week, and in that idea I discuss what I think of JP Morgan.
There you go. Check it out, optionpit.com to learn more. Hit them up at Carmen Line if you too want to buy some far out of the money VXX puts. And on behalf of the Meatball and my friend Mr. Rhodes and our friends over there at the newly rechristened CBOE, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, all the fun stuff you do, including joining us in the live chat. We'd like you guys to come back in about 25 minutes for TWIFO if you like all things skew, because we got you covered there. Otherwise, we'll see you next week for more Volatility Views.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.